good morning, everyone, and welcome to the panel, Activist Investing, Global Investor Perspectives. I'm very pleased to be joined today by Darren Kang, Life Asset Management, Taro Hirano from Japan Catalyst, Hufnagel from Petrus Advisers, and Sanghyun Lee from Flashlight Capital. First half of this year saw roughly 147 activist campaigns across the world, 50 of those actually being in Asia. So Asia is certainly becoming more of a hotspot for activist investing. Interestingly, 38 of those campaigns were in Japan. Interestingly, Europe was slightly down on the activist campaigns. And it's going to be an interesting panel, I think, to discuss those phenomena and what's driving them going forward. So without further ado, I'll ask the panel just to introduce themselves and their firms and a brief introduction to their approach to activist investing, which we all know can be slightly different for slightly different firms. So if I could start with you, Darren.
Yeah, thank you, Terry. I am Darren, CIO and co-founder of Life Asset Management, Korea's first and largest engagement-focused hedge fund. Activism often creates winners and losers, but I believe that engagement strategy can create everybody have benefit. Everybody involved can have a benefit. So we are using very friendly style of activism. Our primary focus on family-owned business, which make up much of Korea's unique corporate landscape. Our team include former investment bankers and corporate finance specialists to effectively address the needs from top management of current Korean listed companies. So we want to align the interest between shareholders and top management, and then we want to make changes to share the success.
Thank you.
Yeah.
Hi, my name is Taro Hirano. From Japan Catalyst. Japan Catalyst is focusing on the activism, and we brand ourselves as a constructive activism. Constructive means we care about the growth of the company and long-term growth of the company while they're asking for tough solutions, especially when the governance is weak or to reach capital structure, whatever. We start with a friendly communication, but we sometimes escalate into the proxy fighting. That's going to be benefits of the future of a younger generation, corporate Japan, and the world, I believe. Thank you.
Hello, it's Hufnagel. I'm the CEO of Petrus Capital, London-based activist fund focused on European mid-cap companies, typically with a market capitalization of 1 to 10 billion, where we take an approach of trying to find good businesses that have historically not performed to their potential and to catalyze change. We, over the past 10 to 12 years, have learned that being only constructive doesn't always work. As a matter of fact, in particular, 10, 12 years ago, it nearly never worked initially. And so we combine a very constructive approach in proposing value-creative measures and improvement potential on the operating side with public campaigns if we end up agreeing to disagree with the management teams and the board in order to then ultimately convince other shareholders of our views and also change management teams and companies, which we've done about 50 times so far in Europe 5.0.
Hi, my name is Sanghyun. I'm a Korean guy. I used to do private equity for about 20 years, but right now I'm based in Singapore and I'm running an activist fund that targets companies in Korea.
Thank you. I mentioned earlier the shift to Japanese activism is growing, continues to grow. Taro, perhaps you can talk a little bit about why you see that happening now and over the past few years and how you think that might change going forward.
I think the real change started from a long time ago. Until 2000, the Japan way was a very popular term among corporate Japan. But it diminishing over time, and the Abe administration started its governance reform 2012-13, and it is since then, gradually things are moving, and then I think, finally in the past few years, the surfacing certain critical, line And the forces behind it is that, first of all, increasing pressure from shareholders. In the old days, there was a cross-holding shares, and the government, TSD, FSA, don't want to keep it for long. So the volume of cross-holding shares are decreasing. At the peak 30 years ago, it was 70% of outstanding, and now it's almost like a 10% or less. So that's good, but more pressure. And the stricter guideline in the stewardship code, which means even the domestic, the traditional asset managers, large ones, have actually stricter voting policy than the global ones, such as the Vanguard or BlackRock. And that's a huge pressure to the board. And lastly, recently, the Tokyo Stock Exchange is becoming more aggressive in pushing them, corporate Japan is shifting towards the more future outlooking. And all in all, I think that the forces at work surpassing certain level, and that makes the activism strategy so, performing at that's the recent situation.
Thank you. Now, Darren and Sanghyun, two teams focused on Korea. Love to hear more about the activist environment in Korea, but you take two different approaches. One could argue one's a little bit more carrot, the other one's a little bit more stick. Love to hear your views. Perhaps, Darren, if you could start off with giving us some insights into the Korean market.
Yeah, so for Korean market, Korea is the world's cheapest stock market, and Korean government is now pushing capital market reform policy to raise valuation. It's widely known, but the more important thing yet to recognize is that generational shift. The most of listed companies in Korea are family-owned business, and those founding first-generation people are sharing similar ages. Now they are going to their 70s or 80s. So it means that the current controlling shares are rapidly transitioning to their children, second generation. For the first generation, they have an economic incentive to suppress company value to reduce their tax burden for inheritance. But second generation people who inherited shares from their fathers have very different economic incentive. They already paid huge tax and they have indebted to pay tax, and so they have financial incentive to raise company value to partially liquidate their shares to the market. So this generational shift is now making very different landscape for Korean corporate governance. So what we are doing in Korea is identifying companies who have done their inheritance process, and then we engage to help top management, not to fight with them, to help them and to align interest between us and to help them to raise valuation overall. So that's the reason why we are using friendly form of activism. Although the transitioning of controlling shareholders, but for now, most of Korean companies are dominated by individuals. So they usually own more than 30 or 40% of shares. So I think that it is inefficient way to fight with them because they are so strong they can easily defend against attack from activism guys.
Exactly. Sanghyun, your approach slightly different.
Yeah.
How do you view the market?
Yeah, well, some guys can be convinced in a friendly manner, and then, just as Darren mentioned, some just don't want to listen. So I try to have a big smile, but I think it's important to carry a big stick. I'm running a campaign on a company in Korea that's about $13 billion market cap, and I've been running, I think I would call it successful campaign with only about 0.4%. How did I do that? I could actually leverage all the other shareholders and also the Korean government.
Thank you. And Till, your campaigns are centered around Europe. Interestingly, that Europe has certainly in the first half of the year seen less activist campaigns than it has historically. It still remains fairly active. What do you put that down to, and how are you seeing the opportunities in Europe going forward?
Yeah. It's a good question. So first of all, obviously measuring the number of activist campaigns is a bit of an art rather than science, in particular given that notification thresholds are different country by country, and many campaigns happen behind closed doors. I've given it some thought about this question. I think we actually see the activist landscape quite active, however, more happening and more being agreed behind closed doors. Europe, if you look back 10, 15 years, activism was basically non-existent or barely existent. And increasingly, people have copied the US model of active engagement with companies and pushing for better governance, better performance. And if I look at our track record, I think increasingly we managed to agree improvement measures behind closed doors, which the press and the capital market will not even know about. And to me, that's probably one of the key reasons right now. We see the number of activists growing, we see the activity growing, or we feel it grow, and it might not be reflected by the numbers, but it's clearly happening.
Interesting. Let's talk tactics. Tactics have probably changed a little bit over the past, certainly decade and the past few years actually, because you've got your tactics which are evolving, but the companies have got their tactics as well, which are evolving. Companies being far more aware of the potential for activism. Can you talk a little bit about your tactics? And Till, can we start with you, and perhaps how companies' tactics are changing as well?
Yes, so our journey has been actually quite interesting. 10, 15 years ago, you would approach a management team with good ideas, or what you would think were good ideas, and by definition, the answer would be, I'm the management team, it's my company, you're a shareholder, I'm right, you're wrong. Which ended up in quite a bit of conflict in the old days. And equally, if at the time, management teams and boards would turn to their advisors, investment bankers, lawyers, etc., the feedback and recommendation would have typically been, don't engage with the activist because he might take the information, leak it to the press, or attack you with letters, etc., etc. And I think 10 years later, and quite a few public campaigns down the road, companies, management teams, the press, and also the advisors have learned that activists typically don't want anything else but shareholder value creation, which is extremely positive for everybody involved. And so the whole environment has become much more win-win focused. As I mentioned before, many campaigns now happen behind closed doors, which obviously has also then resulted in the tactics that we've been able to change and adjust, with more time spent with the management teams, with the boards up front, more negotiations, and less time spent out there in the public with the press or at AGMs and EGMs and proxy battles.
Sanghyun, perhaps if I can turn to you on the tactics side, how do they differ in Korea? How do they differ for your organization in the way that you use, for instance, social media or press?
Right, that's similar to what just Theo said. The companies are getting also very sophisticated in their defense. So gone are the days when we can just turn up and say, you're bad, give us money. So these days we have to be able to give them a concrete strategic and operation alternatives. We have to tell them what they should do, and this is the rationale. Well, hence, we have to often write 100, 200 pages deck, just like those private equity LBO deals. The second thing I would like to point out is that actually it's very important to have the government on your side. In Korea, maybe you can think about this number for today, 14 million people invest in Korean stock. That's 30% of the population and 50% of the household. That's even larger than US. No politician can afford to ignore that huge group of votes. So politicians are quite keen to actually help activists and improve the governance. If you have them on your side, it's much better than have it on the other side.
Yeah. Darren, same view or slightly different view?
Yeah, to implement friendly engagement, firstly, we started to send letters, but those letters do not include any kind of persuasion or governance improvement. It's like a sales pitch. We can help them. We can help you because we have a lot of investment banking specialists and ex-consultant. So we provide a service first without fee, because if they need some capital, we can provide capital market access to raise money, or we can provide consultation about better optimized financial strategy and balance sheet problem, to solve balance sheet problem. So to address management problem first, and then we want to work together to make better corporate governance and better financial strategy. So we act as a independent boutique investment banking without fee.
Right, interesting. Yeah. Taro, any differences between what's the approach in Europe and Korea with Japan and activism in Japan?
I think many things are consistent. All are human beings and not that very different. If I would add a little bit, I think the incentive is very important. We always prefer to do the things, solve things behind the scene. That's easier. However, equity incentive is there among the management of board. That's the best way to do that. But if not, the things actually doesn't move. That's our experience. And in such case, a public campaign is probably very effective, especially when the management working for its pride. It's quite a effective solution.
And does a public campaign include social media as much as letters, press?
Yeah, sort of, yeah.
Yeah, so you include all of that. Excellent. It's interesting, I was actually speaking to a corporate last night, and I let them know I'm on the activist panel, and they volunteered that they're very much thinking about the potential for activism and what they need to do to prepare for that eventuality. So I think companies certainly are feeling that they should be prepared in the event of an activist event. So it's interesting that companies are taking that approach. Now, in the US in the last couple of years, which is obviously the biggest market for activist investing, actually US regulators come out and introduce the universal proxy rules, which essentially sped up settlement of activist events by various regulations. So that's broadly seen as a positive for the US market and a positive for activist investing. Do you see that happening across the European markets or the Asian markets? And perhaps, Darren, if I start with you.
Yeah, in Korea, there are some huge movement in corporate governance. Now the government is pursuing law set to amend commercial law to extend board members' duty about minority shareholders. Until now, Korea has no legal right for shareholders to make lawsuits against board members about their misbehavior. It's a huge loophole. But now the dominant opposition party is now preparing a law set to amend commercial law to make fiduciary duties about overall shareholders. If they passes the legislative effort like that, from next year, you will definitely see the huge rise of activist campaign against Korean listed companies. So I believe that from next year, the Korean market will be more interesting in terms of corporate governance and valuation itself.
Thank you. Taro, perhaps for Japan?
I think surprisingly, Japan, from a long time ago, the universal proxy, and they actually quite easy to submit shareholder proposal. Only thing you need is roughly 1 basis point of the stake for more than a half year. So when it comes to those points, Japan is very activist-friendly environment. Just the point is that the consensus among the society and it's moving. So that's very important.
Thanks. Phil, for Europe?
Yeah, I'd say it's country by country, as always in Europe. There is no united rules as of yet whatsoever on the capital market side. There's a few markets like Switzerland that have recently significantly improved shareholder rights and minority shareholder rights and proxy rights in particular. Other countries like Germany, where the change is quite slow. Overall, however, I'd say that the rights are pretty good for shareholders. It's very few markets where we would argue it's hard to make proposals or to effectuate change as long as you have good arguments and you can convince a majority of shareholders.
Thank you. Sanghyun, if I could turn to you, 2025, as we look forward to the new year, where do you see the best opportunities, you think, for activist investing? Now, obviously you're going to say Korea.
Yes.
But actually, what sectors? Is there particular sectors that you're actively looking at? You don't have to talk about the particular companies, of course, but where do you see the best opportunities?
Frankly speaking, Terry, I'm going to surprise you. I think Japan will be better than Korea next year. Yeah. That means Japan is huge, and I think I see a huge momentum even this week. I think it's a fascinating market, but I think Korea is catching up fast, and we will catch up, as we always have. Just as Darren mentioned, there's a big change in law coming up next year, And don't forget, Koreans, when we change really fast. So I think it will be quite exciting moment for us next year.
Right. And Till, how do you see things developing in Europe?
Yeah, I think there's two points to answer here. Number one, there's the macro side, and then there's the business side. And I'd start with the business side of things. To us, we are entering a period of less growth globally, clearly less growth, which means companies have to do more, have to work harder, more self-help is required. And that's typically something which is a benign and fertile environment for activists to find good new investments and effectuate change. And then secondly, there's the macro question: how does the world and the capital market think about Europe? I'd say that Europe has been a significant underperformer over the past decade for a number of reasons, which has resulted, I think, in very attractive valuations. And so it's hard to say when that will turn from well, yes, I think it stopped to be a headwind, but eventually it might also turn into a tailwind. Whether that's 25 or 26, I'm not clever enough to tell you.
And Taro, from a Japanese perspective, how do you see things developing in that market in 2025? Do you think there'll be more activist investing? The trajectory continues?
I would think so. The more stricter rule applied at the cross-holding shares from the major asset owners, and the Tokyo Stock Exchange still they're very aggressive. So it's going to be more the activist-friendly market, and the more equity incentive among management. So it's going to be a good year.
Last question, I think, because we're just running short of time. Change in, obviously, the US presidency, the potential implications of that are obvious and have been stated, or yet to be implemented. Do you see that causing a bit of a drag on the potential M&A side of activism? Darren, any thoughts on that?
Yeah, uncertainty is always a bad thing for investors. But I want to note that under Republican administration, US dollars tend to be stabilized or weakened for their administration. For example, back to 2017, when Trump started to make tariff policies, actually dollar weakened and emerging market have went up very sharply. Kospi went up more than 50% in 2017. So I cannot understand why current narratives are so negative to the EM Asia. So I think that it's time to be contrarian for historical context.
Till, would you agree on that from a European perspective?
Difficult to say. I think probably in a way the key battle the Trump administration is about to fight is China. And then they will all not forget Europe. But clearly Europe will have, in my mind, the opportunity to do certain trade deals to accommodate some of the trade-related frictions and negotiation points. Whether it's going to have a significant impact on cross-border M&A, I think it's early to tell. And whether that will affect our portfolio. I think, interestingly, most of our portfolio companies are global. I think more than 2/3 have the US as the largest end markets. All of them have operations on the ground. So we kind of feel not that worried about some of the Trump noise. Well, ultimately we'll have to see how the next 6 to 12 months play out.
Yeah, I think there's a lot of people thinking that as well. Well, look, we're just about out of time. Thank you very much for a very insightful panel. Much appreciated. And best of luck. Thank you.